Hey traders, it's Max here from the UTC. Welcome back to our YouTube channel. In this video, we're going to be diving deep into our portfolio's returns this August so far. This month has been nothing short of exciting in the markets, with plenty of opportunities and, to be fair, some solid returns overall. So if you're ready to learn how we've been navigating through these markets and to see it firsthand, then stay tuned. Okay, so let's start with a quick overview. August has been a month of some seriously mixed volatility, with some days of offering some really quite clear trends and other days honestly not really having any way to navigate whatsoever. We've had to be strategic with our thinking in our positioning, including the allocation of our assets across the asset classes. But in short, we've managed to pull off some pretty impressive gains. As of today, our portfolio is up 16.2%, and bearing in mind, we're on the 14th of the month. We've had to be focusing on a relatively mixed basket of assets, making sure that we're diversified and resilient against the current market climate, of which we've seen some pretty significant sell-offs across our global stocks and our risk-off currencies such as the Japanese yen. You should have seen those yen crosses. If you haven't, you can check it out. Okay, so what we're going to do now is we're going to hop onto the screens so I can walk you through some of the positions that we've been looking at and taking over the course of the last couple of weeks. Let's get to it.
First of all, guys, let's check out the track record and see what's going on. And so last week we actually achieved an 8.4% return. We also saw some pretty crazy volatility. We had huge risk-off flows transitioning between the markets. We went from a risk-on transition to risk-off in quite a significant fashion as well. We had a lot of recession fears from the FOMC, and we ended up, as I've written here, we've navigated the market crashes that have taken place. What we are discussing here is chain liquidation, an event and series of orders triggering stop losses, the reallocation of institutional assets from longs to shorts in such a volatile way that risk-off currencies such as the Japanese yen, the Swiss for example, they start to get extremely strong, extremely fast. And so therefore, that's why we've seen such enormous losses in the crosses such as like the Australian dollar versus the Japanese yen, which absolutely tanked. We also saw significant losses in the USD yen, which was trading just sub 162 at one point, but then in a space of a week and a half, we'd fallen 15-20%. And this also bleeds out into the traditional markets such as global stock indices. You look at the S&P, the NAS 100, US Dow Jones, all of these markets absolutely got slapped in the last couple of weeks. So we've had to be extremely dynamic in the way that we've been able to create resiliency in our portfolio. And this is the same portfolio that all of our traders have access to inside the UTC. So let's continue. So as we can see, we've got total annualized P&L here. We're doing extremely well at the moment, as you can see. Now, this is the daily, weekly P&L. Okay, so here 2.95%, here 1.11%, here 2.15%, and then yesterday the 13th we did 1.72%. So far today we've taken a couple of hits this morning in the European session. We took two losses, one in the DAX, one in the UK FTSE. We're down 0.5%. Currently got a position running in the DAX at the moment, and that is this one in here. As we can see here, we are bouncing from a liquidity spot at the moment. There's a pool of liquidity in here, which is why we're getting the bounce back. I've taken a position here due to there being a liquidity block above. If we check the daily time frame, we have a very, very cash-rich area. Okay, now I don't expect you to understand all of these terms. Everything will be explained in time, and the more you watch, the more consistent you will get in your understanding of what I'm talking about. Essentially, this area here is a cash-rich area. We've seen major inflection points in the market here, huge turning points, big amounts of liquidity pushing the market up or away from this area. So my theory, my concept here, my bias is for the DAX to trade lower away from this point of liquidity. And I'm looking for a 1 to 3.46 risk-reward ratio. Now, something else to mention. I am never, ever risking more than 0.25% of my account per trade. That might sound insane, but 0.25% on my account is what I risk, and that is the maximum. Sometimes I am risking 0.15, 0.2, 0.25 is the absolute maximum. I am continuously striving for a minimum of a 1 to 2 risk-reward ratio. So I'm always looking to earn double my risk. Very simple. And as you can see here, let's just go down here. Since the beginning of August. As you can see, August has been an incredibly busy month for us at the UTC, and a lot of positions executed. Now you will see minus 0.25, but because of my risk-reward ratio, I'm earning 0.67 back, then another 0.63, then a minus 0.25, then a 0.66, a 0.2, 0.39, minus 0.2, 0.48, minus 0.25, minus 0.25, minus 0.5, not minus, plus 0.53, 0.56, 0.57, 0.73, 0.54. So I'm constantly looking for quick in and out trades. Some of these will be intraday style, taking over the course of maybe 6 to 12 hours. Always looking to risk 0.25, always looking for a positive return, much more than I'm putting down on the line. Never focusing on the 1 trade or the 2 trades, not even focusing on the 10 trades, only ever focusing on the process. Rinse, repeat, over and over and over again, which is how I've now got over 400 trades at a 62.17% win-loss ratio, a peak drawdown in that time of minus 0.57%, a weekly return this week of 4.92 so far, we're only on Wednesday, a monthly return of 16.2%, and a total return since the fund's inception at 182.1%. Now, of course, I'm not turning around to you and saying, yeah, this is what you can do if you join the UTC. This takes years. I have a lot of experience in this field, but at the UTC, this is the kind of stuff that we do on a daily basis. And it's the first of its kind, because ultimately you are not joining a community per se. You are joining a trading firm where every single day you are given the tools, the instruction, the analysis to go forth and to combat these markets, to navigate these market complexities in such a way that's going to be relatively easy for you to understand. Now, you will never see me on this channel talking about turning 10,000 into $10 million. You will never see any thumbnails that I will create on YouTube for things such as I just did a $1 million trade. It's all toss completely. Don't believe any of the hype that you see. A professional trader is a risk manager first and foremost above anything else. This managing risk at 0.25% maximum risk per trade and looking at volume of trades, returning these positive results. This is where you want to be. This is what long-term consistent growth looks like. This is what resiliency looks like. And we've traded through various market state structures over the course of the last 14 months. And so this is where I want each and every one of you to be. So let's get back onto the charts here. Here's my DAX at the moment. That's still trading low, so that's really nice. It does look like it's going to continue. We do have the sell side bias on here because of the fact we have such a weighted area of liquidity above price action at the moment. Again, these terms and stuff are all going to be a bit confusing to you at the moment, I imagine, but don't worry because it will all be explained. Now, some of the other markets that we've been trading over the course of August, we've been taking shorts and longs in oil, which have done very, very well for us. These have all been forecasted, pumped out into the UTC trading room. Gold has been very good for us as well. We've got a long-term short waiting to trigger down here for a while. We took a long-term long here and took that one in gold, which is quite nice. We've been successfully tackling most of the Aussie CAD. We've taken a couple of hits on this one over time, but it has been a good player for us. Aussie yen as well, the euro yen, and the list goes on. But ultimately, I'm here just to give you a performance review of the gains so far in August. Now, if we look at some of these trade ideas here, you can see that we are not looking at 20 trades in a row, all winners. We are looking at consistent, relatively small returns, but over and over and over again. Okay, so for example, we have a minus 0.2, minus 0.2, minus 0.2, minus 0.25, minus 0.25, minus 0.25. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades. 1, 2, 3, 4, 5, 6 of those were losers. 50-50 win-loss ratio, right? Relatively normal, not anything excessively good or terribly bad. It's normal. But at the same time, look at our returns. 0.53, 0.2, that one wasn't great. 0.88, 0.81, 0.73, 0.79. So therefore our gains have significantly outweighed our losses because of the institutional risk setup that I'm using, that I've taken with me from the city. It's foolproof, which means you guys can go out there and you can lose 10 trades in a row and it doesn't matter. It doesn't do anything. And this is exactly the kind of thing that I've built the fund upon, and I've been building for you guys out there, the other side of the YouTube channel, and of course my traders inside the UTCF who have been with me for quite a while now. Consistency is key. Process is key. That's the mindset that you want to be in. So I hope you've appreciated having a look at the inside the books. As I said, this is all completely open. You guys can head over to the utc.com/track-record and you can check it all out for yourselves. There is free access to our community as well, so you don't have to actually physically pay anything to join. You can join in for free, and if you want to upgrade, that's down to you guys. I'm not going to sell you that. You can do whatever you want. But yeah, I think so far in August it's been a pretty damn volatile month. We've had some significant changes with monetary policy, the BOJ's stance, risk aversion, risk sentiment switchover has been pretty hectic. It's been pretty crazy, but we've been dynamic, we've been adaptive, and we've taken it on, and we've done extremely well as a result. So I'll finish up there, head back over to the camera. I'll see you there.
So, what's next for us in August? Well, we're heading into the final few weeks of the month. As I said, the UTC family is going to be taking a bit of a step back, foot off the gas a little bit. We've had an absolutely incredible month, and it's time to actually enjoy what we've achieved. That being said, we do have some really exciting positions on the line. We're looking at various asset classes, fixed income, global indices, FX space, commodities, even the cryptos as well. And we've got some really exciting things lined up. So we're always looking to push those boundaries and to continue that momentum throughout the rest of the month of August. We've got a couple of major news events that we're really looking forward to. One, in fact, that we're actually looking forward to today. In a couple of hours, we have the US CPI, which always makes for an interesting show at the UTC as we trade it live in our community. So traders, that's the scoop on our month of August so far. It's been a really exciting month, and we're absolutely pumped over here at the UTC to see how the month continues and comes to a close. Now don't forget, if you found this video helpful or insightful in any way, please don't forget to give it a thumbs up. And don't forget to like and subscribe to our channel for continuous updates on insightful market-related content. This time around, I'd love to hear what you have to say. So don't forget to leave a comment in the section below as well, just so I can hear your thoughts, how you found the month of August so far in your trades. And if you have any questions or queries that you might want me to look into or answer, I'd be more than happy to help, as that's what this channel has been built for. So that's it from me at the UTC, guys. I hope you have a fantastic day, a great rest of the week this week, and I look forward to catching you in the next one. I'll see you then.